Hi guys, it's Friday. I'm back in my normal seat here in my office at our headquarters in Talon, and this is my weekly AMA. Like I normally do, I'm going to do a quick sound check, make sure everybody can hear me. Bjorn already asking when Moon, when Lambo, and that it's been 8 months and he's not rich yet. So I'll touch on that a bit later, Bjorn. Might be a long answer for a short question, but if someone could just give me a mic check, I'd appreciate it, and we can chug along here. We have about 10 news topics to cover. Sounds good? Okay. Funny thing, thank you, Ginger Croc. So last week, and thank you, Kunal. Okay, so last week, somebody had mentioned that it looks like I do the AMA from a room in my house or something like that. I can guarantee you I'm not in my house, and I don't have meme pictures of myself in my house either. I was actually going to do this from our conference room this week, but to be honest, there's been meetings going on all day long, and one was running over when I was about to start this. So you're in my office again, unfortunately, but yeah, definitely not my house. In the same building though. So I'm going to jump right in. Actually, I'm going to wait another minute or so. Some people also complain that I jump too quickly into things. So I'll give you guys a quick travel update. I was in London, I think 3 times in 5 days, something like that. Also in Berlin, as well as Germany, and I'll be flying back to Germany tomorrow. Some business development, a little bit of meetings with banks, regulators, some middleware providers, etc. All really tied around debit cards, bank accounts, IBAN accounts, the ability for us to offer different services, and the time frame it's going to take for us to do that, as well as that banking middleware that will provide us access to even additional services. So some of those services mentioned in our roadmap, some not. But again, building out this infrastructure that's something like a Revolut, TransferWise, Coinbase, Robinhood, all kind of built into one. Because, and I've said this before, but the exchange business in and of itself is not a profitable business, especially when you take into account that we're paying makers 50% of the fees, and that we have an ambassador program, and that we're offering discounts for people that hold XCM, et cetera, et cetera, et cetera, et cetera. So it really is like a break-even model, to be honest. So from a commercial side, we need to make sure that we have additional revenue streams. So it's very important that we build up those revenue streams, but we have to do that under a regulated umbrella. So it complicates matters a bit, at least more complicated than some of our competitors who do what they want, and I guess figure nothing will happen to them, or they'll ask for forgiveness later. Okay, guys, I'll touch more on that in our update section. I'm going to jump into, we have I said a 2-hour AMA this week. We'll see if we can get it to last 2 hours. If it does, great. But if questions stop rolling in once we get on the AMA, then maybe we don't even make it to 2 hours. But I'm going to take my time and go over these questions we have right now. Actually, news stories. That's our first topic of the day. So just bear with me a second. I need to get my browser into shape. Okay, so I'm going to start with the questions or the news stories from last week. First one on the radar out of 5. So there was obviously more questions, but our guys in marketing basically curated 5 from last week, 5 from this week. So if we get to the AMA portion, and there's a news story that wasn't discussed that you would like to discuss, just feel free to mention it once we get into the AMA portion, and we'll talk about it. Let's see. Okay, so first news topic was the Winklevoss Gemini Trust and Paxos Trust receiving approval from the New York State, to create their own dollar peg stablecoin. Yay! I guess everybody that's listened to these before knows my view of stablecoins. Look, I was really thinking about this the other day. Like, I really put my thinking cap on, and I think it made me lose a bit more hair, actually, this thinking cap. But I really put my thinking cap on to think about this, right? And I still could not, for the life of me, find any real use case for a stablecoin on the front end for retail clients, beside a band-aid for not being able to have quick access to fiat. However, on the backside, on the liquidity side, on the commercial side, on the institutional side, of a retail-facing entity. I can see one use case, and that's liquidity. Liquidity meaning, I'll give you an example. We have, let's say, a liquidity provider that provides us with BTC USD pairs. Okay, so they provide us pricing BTC USD. Now, we want to be able to clear instantaneously, meaning that if at the end of a trading day when we net our exposure, we owe the a liquidity provider, let's say, $500,000 USD from the trading volume, we have to be able to move that to them. Now, if we have to do that through traditional means, it means a wire transfer, which can take the same day, 1 day, 5 days, 20 days. Really depends on the two banks that are involved in that transfer and any intermediate banks, especially if it's in USD and the country where you're sending it is not, let's say, on the list of friendly countries, or it can take longer than you would like. Even in circumstances like at Noble Bank, for example, where they have an automated fiat custody and clearing mechanism, it's not 100% automated, and it can still take 1 day or sometimes longer. And if it's a weekend, it can take, well, 3 days to clear between two accounts. So that's not optimal. So having a quote-unquote stable coin where we owe you 400,000 US, we send you 400,000 US in a crypto form that you can quickly then go onto another platform and exchange for fiat, or simply sit on until they actually need that fiat to sell, but it's settled immediately, so their risk, at least from the clearing standpoint, is mitigated. So I get that, but does that mean everybody and their grandmother needs to create a stable coin? No. To be honest, we already have a stable coin from that use case of liquidity and clearing, and we already have a mechanism for how it's used. And I hate to say it for all my cryptophile friends, but it's Ripple. Ripple provides basically commercial wallets or institutional wallets with credit attached to them that allows you to quickly clear between entities and then basically get invoiced net 15 on what you owe back to that credit wallet. So I guess there's one other use case I can possibly think of, and that's, we don't have the licensing to do fiat onboarding into a fiat wallet, so we're going to let people send fiat to us, and we're going to give them a fiat backed token that they can leave funds in while they wait to see what other volatile assets they may want to invest in or buy or sell. But that, again, why does everybody and their grandmother need to create one? And why is another one good or bad news, or why isn't it even newsworthy? I really don't see it. And I tried to wrap my head around it. And while the back-end liquidity use case, I think, can really make sense when you talk about moving large amounts of liquidity instantly between platforms, it has to be instant. If it's a token on, let's say, the ERC20 or 223 protocols, it's not instant by any way, shape, or form. It's faster than a bank wire. Maybe it's faster than internal custodial relationships that currently exist, but it's not optimal. It's not as fast as Ripple. It's not as scalable. Anyway, I'm not trying to make you think I'm a huge Ripple fan. What I'm saying is that Ripple, for all its semi-centralized, I hate Ripple, it's not a crypto, down with Ripple talk. This specific stablecoin use case is Ripple's use case, basically. Because if you can have instantaneous transfer between people or near instantaneous with a very high volume, and it's immediately liquid, doesn't matter if it's pegged to the dollar, euro, or pound, or it has a fluctuating value. Doesn't matter at all. Moving on to number 2 from last week, and that's Goldman Sachs postponing canceling crypto exchange drama as a clear case of price manipulation, ? Clear case? No, I wouldn't say it's a clear case. I think part of that was, I read the initial story, and they said that they were simply deciding not to go forward with the crypto desk right now. Doesn't mean it was canceled, doesn't mean they weren't going to do it, it means it was delayed. And then there was a subsequent story that said, it was misreported, it's being delayed. But it was never misreported, at least from what I saw. So I don't think, I don't see clear case of price manipulation there. I see inaccurate journalism, which are, my buddy there in the White House in the U.S., Donald Trump, would say is fake news. But I don't know if I can really correlate a clear case of manipulation on this part. To be honest, that news shouldn't have done anything to the market. I mean, it definitely isn't the root cause of holding Bitcoin below 7, 8, 9, and 10K. Not even close. The news itself is not going to propel. The fact that they open up a large, they create a large market and bring on a bunch more liquidity and actually start buying physical Bitcoins would have made a difference. But the news itself wasn't a catalyst enough for long-term market manipulation. I mean, maybe for a couple hours, a day, 2 days, but it definitely hasn't held us to where we are now just based on the fact that Goldman Sachs doesn't want to put in a crypto trading desk today. So I think that somebody's reaching on that story a bit. And I'm not one to placate or be not or agree with banks. Banks do a lot of things that they shouldn't do, and a lot of really obnoxious things that I wish they wouldn't. So I'm not here to defend Goldman Sachs, I'll tell you that. I would say that the news that they weren't going to open their desk, a lot of other traders on Wall Street were probably quite excited about that, because I don't know any real traders that like Goldman Sachs, to be honest. They're vilified a bit, especially in the FX industry. There's been a lot of, let's say, manipulation talk thrown around them over the years. Not that there hasn't for every other bank, but Goldman Sachs is a bit notorious on that side. So again, I don't see clear price manipulation there at all. It's just too limited. For there to be real long-term price manipulation, you really need something that fundamentally alters price for some time, or fundamentally has a price, a pivot point where you go from I'm in the bullish of bull markets to boom, I'm in a bear market. 20% drop almost immediately. Of course, that's in a normal stock. That would be 80% in Bitcoin, I guess. So yeah, I don't see it. Number 3, CoinMetro. I guess what I have on the brain. Citibank pitching the idea of a DAR. So that's that's their made-up term, I guess, of something that's similar to an ADR, American Depository Receipt, to bring crypto trading to institutional investors. Look, I don't really have anything bad or good to say about this, to be honest. I'm trying to. The point here is that, look, it's another on-ramp for people that. What doesn't make too much sense for me here is that ADRs, which are essentially a way for somebody in the U.S. to buy into a stock, the foreign stock that's listed on a U.S. market. So because it's a little onerous to do that, there's accounts involved, paperwork involved. There may be minimums that the client can't reach. There may be whatever. This is almost like something like an ETF, kind of, where you can buy into stocks sometimes or buy in portions, like let's say half a stock, or even when you buy the full stock. It just makes it easier for the buyer, depending on who the buyer is. Usually retail buyers, not so much institutional. It's not that hard, comparatively speaking, to buy a Bitcoin or an Ethereum in the US. I mean, there's Coinbase. It's expensive, I guess, but it's not that difficult in the end. So I don't know about the merit of this making any real big changes. What I do like is that people are getting a bit creative now on how they can sell these products, getting around current regulatory hurdles, like the fact that Citibank maybe doesn't have a custodial solution right now. So they need another solution to get people into crypto, and that's their solution. I like the fact that they put their creative hat on. That's good. I did something similar here. I think I'll mention here on the AMA. I did a little tokenization structuring help with a company here in Estonia called Hansecoin, Hansecoin, OU, or OU with 2 little dots over it for everyone else in the world. Basically, I helped them create a token structure that allows to issue a token that eventually provides an underlying yield from an asset, a real estate, that backs the token without it being classified as a security. What this does is it's a white labelable format or structure that can allow any hard asset to be tokenized with a possibility of underlying yield at some point in the future without being classified as a security. It's quite big news. No one else has really done this yet. There's other companies that are dealing in something similar. There's some, I think, there's a couple companies that are doing something along the same lines, but this token structure is unique. It includes a 3-tiered kind of token mechanism that I haven't seen before anywhere else. My point to say all this is that people need to start getting a bit more creative on how they create. Instead of worrying about being classified as a security or not a security and not being able to do this and Reg D 505, 506, 504, etc. What they should be doing, and the only reason this is possible is because the regulator hasn't moved. If the regulator would have done their job a year ago or 2 years ago, being creative would be a bit more difficult now. But you need to be creative, and Citigroup here is being creative. They're trying to find a way to get their clients access around current regulation without violating current regulation. And that's not as easy as it sounds. It didn't really sound that easy when I just said it, but if you assume that's easy, it's not. It takes, you really have to put your thinking caps on and figure out exactly how you can get from A to B without, crossing through, whatever go plan. It's like, you want to cross go and collect that $200, but don't go to jail first. So I think I like that about this. Other than that, though, I don't see it as a major influx into crypto. I don't see it as a real solution, because it may make things easier for foreign stocks traded on a U.S. market. I don't think it makes it easier to buy Bitcoin, to be honest, or Ethereum. And if it does today, it probably won't tomorrow. Other platforms will come out. CoinMetro is coming. Other platforms will come out that'll simplify this more than it already is. So, yeah. But I like the creativity. Number 4 out of 5 from last week, ICO funding on a 16-month low. Well, I take this 2 ways. One, great. There was too much money being thrown around, to be honest, in the ICO realm during the bull run, because people were just losing their minds and thought they were going to make money everywhere. People are getting a bit smarter, and this shows. Market is maturing on its own. Good news. It's actually good that the regulator sees this, because they're if the funding just kept going up like this, then they'd start saying that it was a money laundering operation, or whatever. Not because obviously crypto is the #1 money laundering vehicle in the world, because places like Danske Bank that have laundered now maybe close to $500 billion, obviously are no match for the mighty Bitcoin and mighty blockchain. And that was obviously I was being sarcastic there in case one of my regulator friends is watching. Point is that it needed to climax at some point. I think there was a lot of people that had some wealth in crypto because they mined it, because they bought it low, and they just kind of threw it around, and now they're getting a bit more smarter. New money into this market has slowed probably quite dramatically into the ICO market, given the fact that a lot of people probably bought in for the bull run to invest, ended up losing a lot of money, and now are skittish of coming back in, and newbies are skittish because they don't know if we've hit lows. So they don't know if, they think maybe Ethereum might be 0 tomorrow, maybe Bitcoin's going to fall to 3,000, 1,120, whatever. So they shy away. Also, I think a lot of the funding level in general is starting to move from public to private, and private is not always public. Again, it was one of the reasons why the ICO industry, or the ICO idea, was so appealing to some people, is because it allowed small-time players to get access to really interesting ideas and projects that they couldn't in let's say a normal VC or IPO kind of setup. But we quickly moved away from that, and now there's a lot of private equity, private money, small VCs, etc., clubs, whatever, pooling of funds that go into these ICOs, which may or may not actually be public or reported, which means, so maybe that 16-month low is not exactly accurate, though I think it probably has fallen off, especially from the public side. But it's a maturing market, and obviously from most people would probably assume that a maturing market means more money, but not initially, right? Because when you go from a bubble that pops a bit, that deflates a bit, stupid money stops rolling in, because now they're scared. At that point, after the capitulation and the fall, that's when the more smarter money comes in, because smarter money knows how to analyze the market, knows that when they see fear, that's when they get greedy. So I don't think this is going to continue, though I do think the ICO of yesterday won't be the ICO of tomorrow. And that we do need some major restructuring, not only from a regulatory angle, but just from how these things are run, how they raise funds. I think the DICO is a very stupid move forward, for example. It doesn't give one of the great reasons to do an ICO is flexibility. And if the company has limited flexibility and clients can just vote that they want out, it doesn't mitigate risk. It actually heightens risk. It heightens risk because the project may fail even though it had some legs to it, or it may spend 30, 40, 50, 60, 70% of the money, then run into an issue that was unforeseen, and then be forced to refund the rest of that money based on a vote, which then basically puts everybody at zero. So I think it's a step in the right direction, but I think what I'm trying to say is that I think the ICO we knew 2 months ago, in 5, 6 months, a year, it'll be a completely different structure. And that's going to allow some more inflow, more influx of new money and more smarter money into this industry, which will undoubtedly push volumes. Okay, so now on to news from this week. Get back in our Back to the Future DeLorean here. And number one, BitGo receives regulatory approval for custody crypto assets. To custody crypto assets, sorry. Great on BitGo. So Kingdom Trust, I think, is the company that they purchased, if I'm not mistaken. Kingdom Trust also recently acquired some insurance insurance model from Lloyd's of London. So BitGo's moving in the right direction for their client base. Obviously, most of their client base are either ICOs or institutions that deal in crypto, or big businesses that deal in crypto that need somewhere to store it. They already had somewhat of a custodial solution built into their own hot, cold, warm wallet setup. Now they're adding in a more traditional custodial methodology. Step in the right direction, I guess. I don't see this as being huge. I mentioned months ago, maybe 6 months ago even, maybe even more, on one of these first conversations, definitely in one of the first AMAs, but also on Telegram and other places, that custody was the first step in bringing on more institutional money, but there's still other things that need to happen, and that's regulation. And so nothing changed on the regulatory angle. They just got creative on how they can basically define custody under current regulations. So again, creativity, very important right now. They got creative, and they've been able to do it, but the regulator's still behind the times here. So the regulator needs to set frameworks. Without the frameworks, big institutional money is not coming in. Small institutional money maybe, big institutional money won't. And again, small institutional money may go into synthetic products, or they may go into products that aren't synthetic, but products obviously that aren't going to go buy large chunks of digital assets from public exchanges. They're going to buy through dark pools. I'm not going to say it anymore. OTC. This is the last time I will say OTC, I think, in public. I'm going to try never to say it again, because it's just a stupid way to describe it. The entire market's OTC. There's no centralized marketplace, which means it's OTC, just like FX is OTC. If I give you $1 and you give me €1, I guess I'm an idiot. But outside of that, that would be an OTC transaction. Just like if I go on Saxo Bank's platform, or FX Pig's platform, or FX Open's platform, or whatever, Gain Capital's platform, and buy a USD, Euro USD, buy a position, that's OTC. Again, all OTC. So point is that these dark pool trades with large blocks of liquidity is where the majority of these asset or crypto-backed securities are going to buy, which means until they eat up that liquidity, and that liquidity then needs to go into a public domain to find more liquidity, it doesn't affect the price. Point is that it's one step, and I'm glad they took that step, and I'm glad they got creative, but we really need regulation. Everybody should be pandering to their local regulator to get on the move here and really put something on paper. Number two, Xife, Japanese regulated exchange, hacked for $60 million. I saw the news on the hack, obviously. I didn't see if there was any information that was finally leaked, or... Give me a second, guys. 1 second. I'm just saying that I haven't seen the exact news to see if any new information's been released exactly how the hack happened, or if they're even releasing anything on how they think the hack may have occurred. Sorry, it's actually one of our business partners, but I'm not going to pick it up right now because one, it would be I don't know what the information would be on the phone call, so it might not pertain to us, so I don't necessarily want to make it public. Okay, so I'm just reading. So 6,000 BTC stolen, or roughly 6,000 BTC. Some of the deposit withdrawal hot wallets were hacked by unauthorized access from the outside. Okay, so one, that's a lot of money to have in a hot wallet. You can easily mitigate that by having automation that keeps less money than that in the hot wallet. Doesn't take much to move money from, let's say, a warm wallet, or even a or a warm wallet at least, on a same network that is only able to send funds back and forth between one address with multi-key access. So I say this all the time, and I hate to repeat myself: protocols, protocols, protocols. That's it. You know, people make security around crypto seem very complex because most people don't understand how crypto works. Just like security in the internet, cyber security has become this big thing, right? Cyber warfare and everything. When we put cyber in front of anything, it sounds very, you know, very unique, and you know, you need to be you know, you need to have a brain the size of I don't know, a Mexican sombrero or something to understand what's going on, and that's sometimes, I would say in crypto, almost most of the time, not the case. The point is that, you know, crypto is very straightforward how it works in terms of how funds move from one wallet to another, how you can mitigate using different feature sets, who can send what where, multi-key access, et cetera, et cetera, et cetera. It's built to be secure. What's not secure are the people that use it and the systems that they connect it to. You know, if you're connecting your hot wallets via JavaScript that's easily hackable into your front end, you know, dashboard or something, where someone can just go in and break into your hot wallet system from you know, through some JavaScript exploit, well, then that's not crypto's fault. That's not, generally speaking, the protocol's fault. It's protocols on your end. It's your company's protocols. It's how you set things up. It's your, so, you know, 6,000 BTC between hot wallets just sounds, I mean, stupid. I don't, you know, I don't know. It just, again, I haven't seen any more information, so I'm not sure how accurate that is. If more information comes out, I'll definitely make another comment on it next week. But for now, protocols, protocols, protocols. Make sure your protocols are set up correctly. That's it. Make sure they're followed. Don't leave 6,000 BTC in a hot wallet. There's no need to. If you need that amount of money to pay withdrawals, then just institute a 15-minute delay on withdrawals, and parse the money in 1 million increments or 500,000 increments, and immediately move it from that hot wallet and out. Don't even allow it to stay there, meaning that it's just a jumps from warm wallet to hot wallet and immediately gets transferred out. You know, anyway, there's things that can be done. That's the point. Number 3, why high listing fees are bad for the industry. Well, I've talked about this 1,000,001 times. Forget about why they're bad for the industry. They're just bad, period. You know, it's from a business side, it's not sustainable, because yeah, when you're in a new industry, you can charge a lot of money to do things, but that ends, and that usually ends quite quickly. So from a continuity standpoint, it's not the best way to start your business unless you're agile enough to adjust it over time. 2, it's not transparent. 3, there's really no justification on why you're doing it. You may, it's, you know, you know, the real justification is liquidity. I will give you that. But how are we defining liquidity? Because if I have a token that's illiquid and I put it on an exchange that charges me a ton of money based on the fact that they have a lot of liquidity, what does that mean really? Because if my token is already illiquid, how are they adding liquidity to my token? They're adding eyes to my token, sure. And maybe some other people will trade it, sure. But will they? Is there a direct correlation between the amount of people trading the amount of trading, how much of it may or may not be wash trading, and people actually wanting to trade my token. Is there any other benefit? I think, again, an immature market. In an immature market, people make a lot of money. People that sold shovels during the gold rush became millionaires. People that were using those shovels to find gold ended up dying in ditches with no money. And you can equate that to the crypto industry quite easily. When you go around to ICO service providers, they are the shovel salesmen. They're making lots of money. Many ICOs make nothing. And you can even equate it to a lot of exchanges. They charge a lot of money for certain things. And people are willing to pay it, quote unquote, but they're not really. It's because there's no option. And quickly, as a market expands and matures, the options become on the table. People will stop paying it. I think the fact that people are willing to pay it, that needs to stop. Look, if every one of the tokens that get listed on an exchange that charges a ton of money, or whatever, receives a ton of money, whether they charge it or not, would just not go there and end up going to another exchange, that exchange would get more eyes, that exchange would get more volume. It's a process. It will stop. I can guarantee you that. No mature market would allow something like this. As we mature, it will become less and less. I can almost guarantee you right now, fees that were paid a year ago on average are not being paid now, or 9-10 months ago on average are not being paid now. It's even starting to adjust itself now. But the fact that I see ICOs now that say they're putting aside 2-3 million for exchange listing, it's not good. It tells me that they don't quite understand how a market functions and how to be a catalyst for change in that market either. Number 4, Mt. Gox payments may crash the market. Just consider this a very, very large ICO that basically went across all different types of crypto assets, all the majors, and yes, lots of people are going to dump. Will it crash the market? Depends. Depends a lot. Obviously, when most market participants put their crypto into Mt. Gox, it was much, much lower than it was now. So even with our bear market, they're still on a high note. And if they think they're at an intermediate low, meaning that the market's going to continue upward, they may not be selling. So obviously, you're going to have some push down on the market. And if we were a more regulated market, we would that payout would be regulated as well, meaning that there would be some type of circuit breakers in place so that people couldn't just go on and go nuts selling. I would tell these people, if they're watching and you hold a good amount of crypto for Mt. Gox and you're getting some back, dark pool. I'm going to say it because I have to, because no one's understand what I'm saying. OTC. Don't go on public exchanges and sell that crypto. One, you're going to get screwed because you're going to end up getting slipped, or your limit order is going to take 25 days to actually fully fill. Do OTC, get a price, fix the price with another party, send it. Don't screw yourself, don't shoot yourself in the foot, and don't shoot everybody else in this market in the foot by offloading large amounts of crypto onto public exchanges. Number 5, our friends Binance to launch a crypto fiat exchange in Singapore. So I saw this news. I think there's no real time frame around this. They mentioned at Consensus, I believe, I had a few people tell me that they were looking at 10 different fiat on and off ramps. It's great. We're looking at 50. Let's see. So it does say testing on September 18th in 3 days. Invitation only. Okay. I know when we first talked about doing fiat, everybody thought it was going to be, our claim to fame. I never really thought it was going to be a claim to fame, even though it's an important aspect. It is very important in terms of just the market as a whole that there's fiat on and off ramps. I knew 100% that we weren't going to be the only game in town, because if we were, there'd be no market. So if you're the only guy that can offer fiat, while you may have a rush at first, what it means is that the longevity of the market is going to be limited, which is not good for your business. You may make a bunch of money real quick, but it's not going to last. So I never envisioned to be the only one. But what we're creating is a much more holistic platform. So it's not just being able to trade, crypto versus fiat on a web-based platform with no other features and no other services. It's all about additional revenue, and I think Binance will probably start looking at additional revenue streams here shortly when they understand that listing fees and things like that will not be around forever. Let's see. So there's also a comment from CZ in this article that says, He doesn't agree with Vitalik's that crypto won't grow. Just reaching USD market cap will give it close to 1,000x. Blah 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 blah. I don't, I think Vitalik, I'm pretty sure, didn't say it would never grow 1,000x. What he said was that you're not going to see these 1,000x spurts where over a few months it grows. And I 100% guarantee that won't happen, at least on a complete market scale. For individual tokens or different assets that have some type of hype bubble and whatever, it can still happen, just like it happens with penny stocks sometimes, or just regular stocks, to be honest. Crypto hitting the USD market cap is already a pie in the sky, a little bit of a dream right now, considering the current market. Anyway, the point was Binance with fiat. So I think probably this was posted because people are saying, oh, look, now Binance is doing it, we're screwed. No, not at all. We're not screwed. It's good that Binance is doing it. Binance either needs to reform the way they do business, become more regulated, get bought out by someone who's going to do it, or it's going to severely hurt the entire market when they fall. So it's not a bad thing that Binance is coming into the light, so to speak. And it's not a bad thing they're bringing on fiat gateways. They just like, and I'm sure they're probably doing this with a partner. I didn't see that. Let's see where I'm. They just say that it'll be September 18th. I don't see. I don't see anything about who they're possibly partnering with. But anyway, the point is that they're probably partnering with somebody, I would have to imagine, just like they did in Luxembourg, I believe, and just like they'll do in other areas of the world. And it's something that we may end up doing as well. However, we're looking at a much more wider business use case. I know that I'm never going to get 80% of the world to trade crypto, but 80% of the world already deals in some type of remittance, whether it be bank accounts, debit cards, phone remittances, etc. People move money. 80% of the world moves money from one device or one person to another, meaning that if you can tap into that market and include crypto, deliverable crypto, and other blockchain-esque products into that platform, you're light years ahead of everybody else right now. So anyway, I'm going to move on to our Reddit questions. I think we're on a pretty good clip, 40 minutes in, so we may actually go the 2 hours here today, folks. Reddit questions. Let me just pop this over. I want to see. I'm just see it. Okay, anyway, so I'm just seeing if people were active on the MA. So anyway, anybody who's posting questions, I am going to jump on those after I get through these Reddit questions. It's probably going to take about 30 minutes to do that. So if you post and I miss it, post it again. I'm going to open up both Facebook and YouTube after I get through these questions so I can see a longer list of questions, but I still may miss your question if it's been pushed up to the top. So if you notice that I missed it, just post it again. Number one from Reddit last week, CoinMetro fan, how much experience does your engineering team have in designing and implementing highly available clustered web applications that scale? Designing a funky website is one thing. Well, that's not development. But implementing one that can scale to millions of concurrent users is another. Number two, what will be your approach to stress testing to ensure the GUI in the back end will handle the anticipated load once adoption picks up? Will CM be offering two versions of the trading GUI, margined with floating positions like Forex and non-margined that exchange one coin for another like most other crypto exchanges? If yes, which will be released first? What difference would you expect between the two? Okay, so on the first question, so you mentioned that we built a funky website, but that's not really development, that's design. Obviously there's a bit of development in there, CSS, whatever, but it's not really development. So how much experience do they have? Well, inside the team, we do have people that have worked on clustered applications. And obviously you only build clustered applications that can scale. No one builds clustered applications that can't scale, then they wouldn't be clustered applications. So yes, there is experience. Does everybody have experience on the team building clustered applications? No. Is there experience on the team building clustered applications? Yes. Obviously, we're not building this to service 10,000 or 50,000 people. We're building it to scale. So that has always been a key point. You ask about on the second question about stress testing. So stress testing the engine, we build bots that can throw thousands of trades a second, both inside the book and then market orders from outside the book, limit orders into the book, and stress testing not only internally but external liquidity providers to get our mean and average execution times, make sure that we don't see any lost orders or orders that simply get lost inside the book without getting filled, or even worse, orders that get lost in the book filled at an LP or vice versa. Those things we've dealt with for years on the FX side, so they come quite naturally. When it comes to just making sure the website is up or the platform is up, yes, it comes down to that clustered application. Right now we use Amazon AWS servers. We will be using more than likely after the initial launch some physical rack space for the trading engine as well, either for primary or secondary or redundancy. And we will be building out a cluster of nodes on AWS and possibly in other clouds as well. We also use AWS for MLab for our main databases. So we will build out additional clusters. We're already building in redundancy, which means when one goes down, the other one comes up instantaneously, et cetera, et cetera. Not only that's what's already built into AWS, but also things that we've built on top of AWS's own redundancy that's already built into their platform. And then we'll be offering 2 versions of the trading GUI margin with floating positions. So I actually talked about this with our trade guys. So in my mind, when we offer at one point leverage outside of swap trade, outside of, let's say, lending. So there's 2 differences here. For the normal trade platform, you're going to talk about non-margined because there is no margin, meaning that you're just trading one-to-one. So it's going to be like other crypto exchanges. Now, when you add in the element of lending, where now people can trade 3, let's say 2, 3, 5x, more or less 10x maybe at some point. That then requires a little bit different how it works. You would end up having a margin wallet. Now you would have a margin wallet, you would have a trading wallet. The trading wallet would hold your funds, margin wallet would hold the margin funds, that margin wallet would act as kind of a credit wallet, and you would be shown there your available equity, you'd be shown blah, blah, et cetera, et cetera, et cetera. Now, it depends based on how we route those orders. So I think initially they're all going to act as you normally would see a crypto exchange today, which is they're basically as soon as you buy BTC USD, you own BTC. That's it. You sold your, you own BTC. Boom. As soon as you buy euro, you own the euro. The other value, whether it be euro, USD, whatever on the other side, is indicative. What we will do though, let's say once we get into non-deliverables and higher leverage, it will be more like an FX platform where you have floating positions. That would definitely not be released first. Number 2, what a Ver1? At what point would you panic sell some of all the raised Ethereum to secure parts of the ICO funding? What if Ether goes to 100 or 50 or even lower? Would you hold all the way down? Wouldn't hold all the way down, no. Wouldn't be panic selling because it would be already kind of set in stone. Right now, the levels I'm looking at essentially on the downside, USD levels, 150 would be the first major level. If broken, I think we head probably down between 60 and 80, which is really where your next major resistance is. I would not be willing to hold down to 60 or 80. 150 would pretty much be my cut point. That would mean a close and then a confirmation close in a rather small time frame, maybe 15, 30 minutes, 1 hour, would mean we would sell Ethereum. So on the, that's about 150. 150 is more or less the level. Though if you look at, Bitcoin, for example, and do the technical analysis as far as peak to trough, we can go as low as 1120. That's 94%. We've done that twice already. And even at the mean or average peak to trough, we go to 2950 USD. So I still think there's room to go lower. And if Bitcoin were to follow those levels, I think Ethereum would be into double digits for sure. Tara Sullivan 1992. Will the PAM accounts from FXPig migrate and be investable via XCM? Eventually, I do believe we will merge the two platforms, meaning that XCM will be available to spend on FXPig. So the answer to that, I think, is yes. The time frame, though, is still up in the air. Number 4, international mix. I am part of the live beta testing team, and there are clues about potential fiat partners or providers on some of the screens. Have these been confirmed? If so, I will call my firstborn Kevin because you just made my week. Get ready to call your firstborn Kevin, I guess. I actually don't know what screens you're referring to, so I'm not sure what partners are mentioned. But we already do have fiat for credit card deposits. We already have ways or on-ramps through our banking partner for USD, Euro, Pound, I believe Canadian and Canadian dollars, and maybe Swiss francs. I have to go back and look at the list actually, and we're waiting on Australian dollars and Japanese yen. Those are the next that are going to come down the line, and our rates are very competitive. We'll put it that way. As far as wire transfers and SEPA transfers, we have SEPA transfers available in Euro, in the EU, EEA. And we have another on-ramp which is slightly more expensive for USD, for Swift wires. And we have an on-ramp for multiple currencies, again, slightly expensive. These are intermediates, so they're not direct banks. So they do carry a fee. They're not anywhere near what the fees would be, let's say, for other crypto exchanges just to buy crypto, or definitely not credit or debit card transactions, but they're higher than our exchange fee, that's for sure. So. But yes, we do have confirmed gateways already, and I mentioned that before in other AMAs actually. Number 5, oh yeah, Bruce Lee 707. Hi Kevin, what is the status of the debit card? So I mentioned I think 2 or 3 or 4 AMAs ago, something like that, 5 AMAs, I don't know. I now keep track of my life based on AMAs. It's like, that was 7 AMAs ago. We talked about having 2 options, and now we have 4 or 5. And the reason why we're still looking at options is some companies that told us or that we investigated that were not crypto friendly, after we decided to meet them in person, became crypto friendly, became CoinMetro friendly and Kevin friendly, I guess. So things changed, and those brought in much broader use cases aside just from debit cards to multiple other products from traditional financial markets that we can offer to our clients, and multiple additional revenue streams, et cetera, et cetera, et cetera. So the status right now is that we're in high-level talks with 4 or 5 providers. The good news is that the time frame to get this done is no longer 3 to 6 months. So that's why we haven't started it yet, because we want to still be on tap to get it done within the time we promised. However, are in the current roadmap. But we really have a lot more options than we initially thought we would have, and mainly because we've been able to do these meetings and fly around and meet with people and get them to see our faces and understand really understand our business model. In terms of institutional participation in the crypto market, where do you think we are now, and what kind of time frame are you looking at to see greater participation? I think we're basically, for lack of a better term, we're at 0. There are some institutions in crypto, and I'm sure there's a bunch of guys, maybe not watching this, but that'll hear about this or whatever and go, oh, we're a hedge fund, we're an OTC provider, and we're in crypto, and get all upset about it. But there are big banks and there are larger institutions that are putting their toes into the water, that are either investing in blockchain R&D, or they have a bit of crypto on their books, or they're looking at blockchain or some type of token or coin like Ripple to move money across borders, et cetera, et cetera, et cetera. But the penetration is very low. You can see that just by the market cap, obviously. So what I think is that regulation is the next hurdle. That's the big thing. That's the catalyst. Forget about ETFs. Forget about the Winklevoss brothers tokenizing, I don't know, the moon or some other PR stunt. Forget about all that nonsense. The next step is regulation. The regulation needs to come. The framework needs to be there. That is going to make every institution more comfortable and give them guidelines to follow. Once they have the guidelines to follow and they know exactly what they can and can't do, they will be much more keen to come into this in this industry. Number 3, given the drop in most cryptocurrencies, do you think the trading volumes have also dropped significantly? This is less and less people are trading or exchanging their fiat currency for cryptocurrency. Will crypto go the way of the tulip mania in the 17th century and completely disappear? No, it won't completely disappear. The market, as you know of it today could very well disappear. I would counter the tulip mania comment by saying you can still buy tulips in a market. There's still a market for tulips. Yeah, you're not going to pay 2,000 euros for a tulip bulb, but the Netherlands still runs tulip auctions. They still have a market, just like the internet bubble burst, but the internet still exists. There's still an internet, and there's still many apps built on that protocol. So I think the blockchain bubble or the blockchain market may burst 5 or 6 more times, who knows, before we actually see a maturing of this market from a technology standpoint and also from a financial standpoint, or a fiscal standpoint. I think, to be honest, even though the value has dropped, I mean, if you look at traded volumes, the traded volumes now, when you look at before, when crypto was as high as it was, at the highs, I don't think the average daily volumes, let's say on a Binance, changed much. They did fall a bit, but they're still around 1 billion. Again, let's not get into wash trading, but let's just say that the published volumes are generally in the same realm, I believe. I think Binance may have been doing 2 billion at one point. But I think if you look at the mean or the average over like a monthly basis, there's not much of a fall off. There is a fall off though, for sure. I don't think it'll give way. I think once regulation comes in, it allows larger companies and it allows larger market players to bring in their own ideas. R&D has been ongoing at big banks like ING, ABN, HSBC, BBVA, Santander, etc. Those guys have been putting money into blockchain. Don't think that they're not sitting there building protocols that they will want to use to move money cross border, to maybe tokenize even aspects of their own business, to be able to provide rewards to card holders, tokenize cards so that they can provide a reward system and a payment system all on their own token and be able to control more of the in and outflows. All that stuff I'm sure is getting worked on, but they can't release anything without the regulation, so they're waiting on it. So regulation, I think, to me, is the catalyst. Will it happen? I think it's almost guaranteed to happen at this point. I don't think there's much choice. While some regulators in the world may still think they can wait this out, I think the first actor is going to quickly see that it was the right choice, and that will mean that other regulators will follow. It's always hard to get someone to act first, and a lot of times that happens from a judiciary standpoint, meaning that there's some precedent sent by a federal judge, and that precedent in the U.S. for the most part, and that judge says Bitcoin is at whatever, or a token is a whatever, and then that's used then by the powers that be to create the framework. So, but we're getting there, and we're moving in quite a swift manner, I think. I don't think we get out of 2019 without some serious regulation in at least one part of the world. Lastly, I think the word exchange has been used very loosely. My definition of exchange is one central institution, could be privately owned or run by authorities, but here exchange is used as a trading platform. For me, example, Nasdaq's an entity. Yeah, I agree with you. I've actually said this before. I agree with you 100%. An exchange, in a normal market, and let's take one exchange as we'll take Nasdaq, not because, US, most people know the Nasdaq in the US, but the Nasdaq is also based in other parts of the world. There's a Nasdaq in the Baltics, for example. So let's take the Nasdaq for an example. If you have a company and you want to get it listed, you can't go to Kevin's exchange. You go to Nasdaq. They're a regulated, fully licensed exchange, and that's where you can actually list an exchange traded product, whether that be a stock or whatever other exchange traded product. We use the word exchange now. The word exchange obviously can also be a verb, right? It's not just a noun. And in the verb, we are exchanging things. We're exchanging fiat for crypto or crypto for crypto, right? So I think that's why, because I don't think the first people that but started to use the word exchange around crypto exchanges did it because they were thinking of the Nasdaq. They were thinking the fact, well, I'm exchanging one thing for another. It's an exchange. I agree with you, however, 100% that in reality, all exchanges right now that exist, unless they become highly regulated in certain regions, will end up becoming brokers or clearing agents. They will not be. They will no longer be an exchange by the classical definition. That is why we have a regional approach. That's why we're Europe, Asia Pacific, Latin America, very regional specific regulated approach. We want to become number 1, number 2, number 3 in those regions. We want to be fully regulated in those regions. That allows us, once the switch comes, when the exchange switch comes, we have the opportunity to possibly become or be the default exchange in that region. Number 6, Bets 3233. How, when I think of the speed of which this project is being developed, I often picture an old, frail, dying snail. I don't think I've ever seen an old, frail, dying snail, but it must took a long time to watch, I guess. I can't help but wonder why it takes this long. Does it have to do with the wrong number of people working on it, or rather the right kind, or is it maybe being done deliberately in anticipation for the right market conditions, or is it all the above, or none of the above? What can you say to your contributors out there and potential future ones to reassure them that this apparent gap between your genius, inspiring plans, ideas, and implementation is not something they should worry about? Also, thank you very much for putting yourself out there and sharing so much of your knowledge and insight with us. I like that little, like it's kind of like aggressive passive at the end. That's kind of nice. But anyway, good question. The old frail dying snail is a bit over the top, but good. I get it. So there's a lot of things that play into this, right? So you say, does it have to do with the wrong number of people? Well, initially, yeah, we didn't have. I would say we still have people we need to hire, but hiring the right people takes time. You know, you should know that, you know, in a normal corporate atmosphere, let's say if you have to hire, I don't know, let's just put a title out there, head of compliance, right? The turnover, let's say the head of compliance, what you actually spend can be up to 2 years worth of salary, because it can take 8, 9, 10, 12 months to find the person, and then it could take another 12 months to get them fully trained, right? So in the time that the project, you know, in ICO time, you know, like ICO years, I guess we're long in the tooth. But when it comes to a financial business, a financial enterprise, we're still super young. We're in Pampers, that's for sure. And not a lot of time has passed. So initially, yeah, we didn't have enough people. We definitely didn't have enough people day 1, 2, 3, 4, 5, 6, 7, 8, 9, et cetera, et cetera, et cetera. We're gaining more and more people. We still need more people in different key areas. And we're looking for those people. But it takes time. So that's definitely a piece. Or rather with the right kind. And sure, there's been a few hires that didn't work out. But again, that's unfortunately, you're never going to find the perfect person on the first hire. And a lot of companies end up giving, you know, founder status to 10 different people, and then they can't get rid of them. And if they're not the right person, they get screwed in the end. We've been flexible with that. If we have to get rid of somebody, we get rid of them. Not that we like doing that, but it's all about retaining flexibility. So yeah, it's partially that. Not so much, but yeah, that plays a role. Or is it being done deliberately? It's not being done deliberately. We did decide to peg the token price to €2 for this very specific reason, that we did think that we were going to see a bear market before future bull runs. And while we did see more bull run than we initially anticipated, look where we are now. So even though there's been this delay, even if the token were to go down to 3 cents and you purchased it at 10 cents, but Ether was at 1,000, you're still pretty much at break even or even better. But the delay itself is not deliberate. It never was deliberate, and it never would be deliberate. We need to create something. You know, the fact that we position ourselves as a regulated entity. There's a lot of things that currently under the regulation that doesn't exist don't apply, but under applicable regulation from other markets do apply, that we need to adhere to. Why do we need to do this? Well, we look at the long-term business. We're not looking at this quarter or next quarter, or I really want to launch this thing today. I don't really care about 5 years from now. We want to make sure that we're still here. And while regulators in certain parts of the world have, like the UK, for example, with their sandboxes allow you to test things that aren't necessarily regulated without getting into trouble. Not every regulator does that. And unfortunately, we're not just trying to do business in the UK, which means that we need to be mindful of every regulator in any country where we plan on onboarding clients. And you know, if this was 2 years, if we were the first guy on the block 2 years ago, maybe we could have taken more risks. Maybe it would have made sense. I don't think it makes sense anymore. I think we're rapidly changing into a regulated environment. We also went through something where we were initially developing a certain product. We saw that from many angles, we needed to revamp a bit how that product was brought to market. We sat down and came up with ideas we thought were correct. And then we realized that ideas we thought were correct might not be well received by the community. So we kind of started from scratch. So, you know, I take full ownership of that delay. But I think in the end, it leads us to a better product, which is what everybody really should want. I understand everybody's frustrated on the delays. We're frustrated on the delays too. I would have loved to have this thing launched 6 months ago, 8 months ago, whatever. But we didn't do it. And we didn't do it, though, for good reason. So I can sleep at night because I know there are good reasons. It's not because we don't know what we're doing, or our development staff isn't from, you know, I don't know, New York City or whatever nonsense that some people have said back and forth here. over the last months. So it's, you mentioned genius in there, and I don't consider myself a genius by any stretch of the imagination, but I do have experience in a lot of things, and that experience tells me that there's certain ways to do things, certain ways not to do things. And I'm not 22 anymore, and I don't have, so when you're not 22 and you have experience, it tends to make you do things a bit differently. And what I need is to make sure that we do things right. And if doing things right pisses off a few people, so be it. But if you want to consider, my duty is 1, to my shareholders, 2, to my token holders, and 3, to my clients, my future clients, which means I need to make sure things are done right, and that takes time. And yes, if we had the perfect development team, maybe it would have taken less time, but we didn't. Nobody has the perfect development team. Sometimes it takes time to mold, especially when you have to do many other things. When you're only focusing on development, it can be easy. But when you have to focus on development, regulatory, the reg tech, which is the tech built into the regulation, and then the actual selling of not just selling your product to investors and possible investors and et cetera, and business partners, but selling it to a regulator, selling it to a bank. It's not easy. I mean, even a company like Binance, who obviously has the money on the books to make banks maybe a little bit happy, I don't see them with fiat gateways all over the world yet. And there's a reason for that. It's not easy. And it took them, 10 months to get their first fiat on-ramp in Uganda, and then Luxembourg through a partner, and now Singapore 11, 12 months in. So there you go. And I don't think they just started doing this, yesterday or the day before. And they're obviously coming from a point of power because they're well known. And we did this from a point of not that same amount of power, that's for sure, and we were able to accomplish it. We've gotten a lot of accomplished, let me tell you, in the past 10 months. I think a lot of people focus just on development, but there's a lot more that needs to be focused on. I don't want to, so we're already over an hour, and so I'm going to get to the questions. And we have two more rows of questions here, guys, and then this week's questions, where I see 6 different questions. I'm going to try to roll through them as quick as possible. I think by 6:30 my time, another 27 minutes, we should be able to get into the live questions. Okay, so bear with me here. This 2-hour promised AMA, I believe, may just very well be 2 hours. Number 7 by Matt's a Boss. Looking back at the ICO, is there one thing you would do differently? What would that be? One thing, and there's probably more than one thing, if I really think about it. I think that looking at it, I probably would have revamped a bit and did a little bit more flash sale-esque campaign. I would have not the initial team that was behind the token sale platform. I wouldn't have hired them to create that platform, which would have stopped a few delays. I guess the main thing that I would have done, honestly, is probably retooled a bit the way we sold the product, in terms of how it was, let's say, delivered from a marketing standpoint, how we marketed it, and how the sales structure worked. I can look back and say the flash sales were immensely successful, and we probably should have stuck to more that type of, let's say, FOMO-inducing schedule rather than a more standardized pre and main sale. Following up on the question I asked the last AMA, you said you're going to be custodial solution for the next year or so. So how will that work with TAM and ICO? Since I assume you're going to have to get them to support these new tokens CM will be creating, which they might not support already. The TAM token doesn't necessarily need to have a custodial solution, because the TAM token, you're buying a token, yes, but the funds from that token are immediately simply moved into a trading account that gets traded into other digital assets. So the actual custodial part of that will be depending on the portfolio or open positions of the TAM manager. From the ETCF, you're buying one token, yes, but it's immediately diversifying into a bunch of other listed tokens, which the majority will be well-known, let's say, ERC 20, 23, 721 based tokens, at least initially. You're right, though, from when we do list tokens, period, that aren't that liquid, we will require tokens to give us liquidity, meaning they will have to deposit a certain amount, probably 5% of what they raised roughly, into a liquidity pool, which will ensure that we can, when needed, have some market making capabilities behind that token to provide some liquidity back to their own buyers and sellers. So, but you're right. It has to be a very flexible working relationship. But at the same time, even our banks have to approve those things. So that's why the vetting process is so onerous, because not only we have to approve it, our banking partners have to approve it, and any custodial solution that we may partner with would also have to approve it, as well as any insurance, any insurance, any type of third party that ties in to our overall money flow would have to approve these different tokens. So when they're on the same protocols, it makes it easier to a certain extent. But when they have their own protocol, or they're on a new protocol, or a newer protocol, or a protocol that's not well known, again, makes it more difficult. Number 8, Robin Timmerman. About the trade view module, will there be some kind of visual input like dragging SLTP values directly on the chart, similar like CTrader? I think just typing numbers in a box. The Chart IQ, which is a library we use, does have dragging of SL and TP. So yes, those type of things will be available. When it gets released on the 24th, I think at 2, I forget the exact time. I'm not sure if that'll be there, but it is something that will be built in, along with many other different types of kind of trading from the chart capabilities. 2, do you listen to podcasts? Anything on the topic of finance, economy, or crypto? Can you remember? I haven't listened to a podcast since I listened to one on an iPod when they first became popular a long time ago. Not because I don't think that there might be something out there I would enjoy. I just generally haven't really had any time to look to find one. Similar thing, TV, things like this. I haven't really watched a good TV show or read a good book or whatever in quite some time. And that's mainly because I just can't find the time. But if I do come across one, I'll be sure to let you know. I think we may start doing a podcast at some point, so maybe that'll be worth listening to, hopefully. Okay, so I think we're on questions from this week now. Yeah, Back to the Future. Okay, DeLorean up, and now on to this week. So number 1 coming from Biordo94. What are your thoughts on the New York Attorney General's report on crypto exchanges? My thought is that if you're a crypto exchange and you're accepting clients inside the state of New York, you should very well know you're in violation of because they have their own license, obviously, and shame on you. However, I'm just going to bring up the announcement here because while I did read it, so I'm just trying to see some key. Okay, so automating trading policies. Okay, so they have discrete policy on automated trading, limits message rates, and monitors for small orders. And pretty much, nobody. Well, this is part and parcel to what I always talk about, which is price discovery. So the limiting of message rates, however, is not really something that I would want to do on my side. Though some liquidity providers will ask us to do so. I'm almost sure of it because they limit their risk that way. However, from my side, I'd like to keep no limits. However, when you talk about policies on automated trading and monitoring of small orders, those things are general price discovery. So, look, I think generally speaking, the New York State Attorney General overreaches on some things, but they're not wrong. And that while I think they do overreach a bit here or there, I do think that for the whole, I give them thumbs up for actually trying to enforce some things and mature a bit the market that's available to their residents. That's their job, and they're actually doing it. So heads up to them. Whether they're doing it the 100% right way or whether I agree with everything they're doing is another topic, but they're doing it, and that's their job, and they should be doing it just like every other state in the U.S. and country in the world should be instilling some type of frameworks and making sure that companies follow them. Can you comment on the questions that the AG proposes that we ask of virtual currency platforms? Okay, let's see. Number 1, what security measures are in place to stop hackers from unlawfully access to the platform for particular customer accounts? Makes perfect sense. All the hacks that are around protocols. Makes 100% that this needs to be asked and should be answered at every licensed level, as well as even if there isn't a license in the country, some government entity should be making sure that customers, clients, end users in their country, state, region, whatever, are protected. And this is kind of first level protection, so makes sense. Number two, what insurance or other policies are in place to make customers whole in the event of theft of virtual fiat currency? I think that one's a bit ridiculous. Bit ridiculous only because they should be asking that same thing of insurance providers. When insurance providers are ready to fully insure, let's say, hardware wallets, then I'd be much more happy to answer that question. If obviously to put the onerous on us. Now, if it's a protocol issue where it falls on us, same thing in FX, right? So if we have an FX platform and you lose money because our system doesn't work correctly, it's on us. But if the LP takes the price or rejects you based on whatever parameters they wish to reject your order on, or they accept your order and slip you 55 points or pips, as a broker, I'm not responsible for that. My responsibility is to follow up and make sure I get all the information so that the client knows what happened. But I can't be held financially responsible for that because it's simply not something I can control. Though the client needs to be aware of that. Here, if there is an issue that happens because of the client didn't use 2FA, for example, and their account gets hacked because of that. Their CoinMetro account, someone gains access because they leave their email open at a Starbucks, whatever, then there's no way we should be held responsible for that. If we have let's say policies in place that are policies that are at or above board based on any other financial entity, and that's on the client side. So I think that question needs to be revamped a bit, to be honest, but it's in the right light. But they should be asking other entities the same thing. Number three, what guardrails or other policies does the platform maintain to ensure fairness for retail traders and trading against professionals? Price discovery. 100% agree with that question. 100%. When you have high frequency trading that can come in and pick off orders and basically easily manipulate prices on low liquidity markets, you need to have a protection in place for consumers, and that's called price discovery. Number four, what controls does the platform maintain to keep unauthorized or abusive traders off the venue? It's the same question as number three, it's just a little more detailed. What policies are in place to prevent the company and its employees from exploiting non-public information to benefit themselves at the expense of customers? Yeah, we talked about this internally actually the other day. If we list a token on the exchange and we know it's going to be listed, we cannot allow our employees to trade on that platform. Now, if the employee is only looking to convert Bitcoin to cash, or Ether to cash in a one-off transaction, I don't see any problem with that whatsoever because there is no insider information on Bitcoin on the CoinMetro platform. However, speculative trading, especially on tokens, should be restricted. And this is really just normal basic policies that any other exchange or broker need to follow under a regulated environment. Makes perfect sense, and it should be followed. Number six, how does the platform notify customers of site outage or suspension, the terms under which trading will resume, and how customers... Seems like a fair question to me, and that obviously should be an automated thing so that when the platform goes down, there's an automated message. There probably should be something like a status page on the website, which we're looking to do as well, that shows you the uptime, the API uptime, the platform uptime, etc. So people know when it's down, why it's down, automated Twitter messages, emails, etc. What step does the platform take to promote transparency and to subject its security, its virtual and fiat currencies, and its controls to independent auditing or verification? Another question that I think I don't see the question as bad or onerous. What I do see is that they need to be asking that question to external auditors, because I don't know of many external auditors right now that have the competencies to be able to audit this type of platform. Now, trading platforms, yes, to a certain extent. You got to understand though, with those, there's usually some type of universal type of logs or some standardized logs in most, let's say, retail trading platforms. So they know how to deal with those logs. Here, every company tends to have their own web-based application, which is going to make that a bit more onerous on the auditor side. So I do feel that we need to head in that direction. Auditing is a great thing when it comes to this type of business, and it's needed and it should be required. Number 8, is the platform subject to and registered under banking regulations or a similar regime, for instance, the New York BitLicense regulation? Well, that question goes without saying, that should be asked. though there's very little regulation that exists in the world. So in that sense, that question is a bit onerous or overreaching, but it should be asked. And in a perfect world, everyone would be able to answer that with the regulations that apply to them. Unfortunately, they can't do that yet, but they should know if regulations apply to them. And if they do, they should be looking to acquire those licenses. And number 3 from our guy Biorbo, at last tweet, the announcement, she writes, based on the results of our report, we have referred 3 platforms, Binance, Gate, and Kraken, to New York State Department of Financial Services for possibly operating unlawfully in New York. I've mentioned this a lot of times, right? So as a financial entity, whether you're licensed or not, whether you give a shit about regulation or not, whether you think regulation is a waste of time or not, as a business owner, as a mature business owner, you should know when you operate in different parts of the world, whether you're legally operating or not. If you know and don't care, that's shameful and a little bit scary. And if you don't know, it's probably worse. It means that you have no idea what you're doing, and you probably should step down from your position. So more than likely, these platforms have New York State residents on inside their platform, or they've rather egregiously just not adhered to any best practices, which I don't think would be the case, especially for maybe like a Kraken. They do have some best practices in place for sure. So it's probably that they're dealing with New York State residents, and those residents may have complained about something, one or another. That's what then it came to light. And they shouldn't be taking on New York residents because they don't have a BIT license. So I think what will come of it is that what it shows me is that regulators are going to start taking some action, and that's a good thing. It's going to cause some turmoil. It may cause some price fluctuations or what have you in the short term, but it's a good thing in the long term. We absolutely need regulation to form some frameworks. Or, good people do bad things when they're not told what to do. I'm telling you, even good people will not follow the rules if there aren't any. So number 2 here on this is Theo Zinhoft 2. Can you explain how the lending platform will work? Will the person be lending to CoinMetro or to users seeking to margin trade? If the latter, what happens when they get liquidated? The person's lending gets their daily interest or the full collateral? Okay, so it's peer-to-peer basically. So basically, I'm a trader. I have 10,000 in my account. I want to trade with 100,000. I take 100,000 loan, a loan or an advance from another party, from another peer. I start paying an interest rate that gets broken down by minute, basically. So if I hold that money for 30 minutes, or an hour, let's say, and just to make the math easy in my head right now on a Friday afternoon, let's say the interest rate was set at 2.4% for the day, which is crazy, I know, but just bear with me. And I held it for 1 hour, I'd pay 0.1% of that 100,000. So I'd have to pay 100, whatever the unit is, euro, US dollar, whatever, Bitcoin, etc. So I would pay that 100 would get deducted. It actually gets deducted right away from that actual margin balance. If the position gets liquidated, which means it gets liquidated so it hits stop out level, then obviously the funding gets returned to the funding book. So we will have an option that will allow either continuous funding, meaning that if you put 100,000 up for lending and one person takes it and then gets liquidated, it can go right back into the funding book and be available for funding again, or it can be one-off, meaning you put it up, when it gets liquidated, that money goes back into your normal wallet. You can choose to put it back up for lending if you want to. Number 3, Fark. Do you have clear marketing plan once the product is launched, and what is it? Yes. And I can't really explain the entire marketing plan right now, or else we'll be here for 4 hours. Rest assured, we have quite an experienced marketing team at this point. It fills half of our second floor, and it includes SEO, copywriting, content management, email marketing, organic and paid search, as well as PR companies that work for us in the UK, here in Estonia, etc. So it's a fully encompassing marketing campaign that takes on both traditional and non-traditional media, social, paid and unpaid, as well as search, obviously. Number 4 out of 7, I think, or 6. Crisp808, hi Kevin, what's the plan for Americans as far as the closed open beta? Will we be left in KYC limbo still? Can you clear up the question of when exactly XCM will be tradable? Okay, so plan for Americans for the beta. You guys will have access to the beta, no problem. It's paper trading. KYC limbo. The KYC limbo is only going to be constant until we have the completed PPM in the US for accredited investor. And at that time, we will also release the solution for non-accredited investors, though the solution for non-accredited investors will become active once live trading is available. So, but the actual solution will be announced. So not much longer. The PPM should be in its last final stages of actual drafting for submissions. So I would say within the next few weeks. And clear up the question, when XCM will be tradable sometime between the end of Q3, which is September 30th, and the end of Q4. So somewhere in that, our goal is to make it happen sooner rather than later. So we're trying to pinpoint a date. I think it's going to be sometime in November or December, preferably November, but we haven't yet pinpointed the exact date, but it's in between that 3-month gap. Robin Timmerman, good afternoon, Kevin. These days, the next international financial crisis is being announced. Yep, 2020. Everybody ready? Yep, coming to us in 2020. One of the culprits could be automated stock trading. In this scenario, do you believe people will stop trusting the current ways of storing and investing financial assets and flock to crypto, thus massively speed up adoption? No. No, I do not. Unless there is unless the market has matured a great deal by that time, giving them the opportunity to move into crypto. 1, easier, 2, cheaper, and 3, that there isn't a hack every 3 or 4 days. Regular people, meaning the masses, I don't think will move from, oh my God, there's another crisis, let me pull my money out of GE stock, or whatever, stock, and throw it into Bitcoin. I don't necessarily see that happening, no. Though I do, look, these things are cyclical, right? You don't need to be a genius to predict the next fall, nor do you even really need to understand why it's going to happen. I can guarantee you one will happen. 2020, so 2008 was the last obviously major crisis, though we have had a few small crises in between. Before 2008, you essentially had the early 2000 bubble of the internet, which caused a bit of a crisis. Before that, you had the late 80s, early 90s. Before that, you had the 60s and 70s with oil and gas. We would be due probably 2020 is a good date. The mean average of in between crises of 12 years makes sense. Though I would take that with a bit of a grain of salt. I do think there could be a million reasons why we get pushed into not just automated stock trading, but I don't think it would be an automatic push into if the crypto market is what it is today in 2020. Absolutely not. It's a hard question to answer because I have no idea what crypto is going to look like in 2020. If by then we do have, which I assume we probably will, if the market still exists, a more structured framework, then yes, we could see an influx into crypto, just like you see influxes into gold, or you used to see influxes into Swiss francs and Japanese yen, stable, what were considered to be kind of people would flock to stability or whatever when there were instability in higher than normal instability in markets. So markets are always unstable. Number 6, active quantum FUD. What is the deadline for KYC? I'll get around to it eventually, but if the exchange in 2019 doesn't matter right now. Well, if you're a contributor, KYC should be done, I would say, as soon as possible. It doesn't really make any difference because you're simply delaying the fact that once XCM is available, you're not going to get yours. It literally takes like 5 minutes. So is there a deadline written in the sand? No, not really. I guess not, but it's 5 minutes. I would just bang it out. I get it over with, is what I'm trying to say. We will be we will be pushing out, once the exchange is closer to being live, a new completely automated KYC process, which will take about 5 minutes on average to get verified. That actually might happen in the next couple of weeks. So if you're really that lazy, I guess you could wait 2 weeks and then go through this new process. So up to you. All right, guys. So let me let's dig in here. We're just about at 6:30 my time, so I think that was a pretty good estimate. Let me dig in. Let's see. Sorry, guys. I'm just checking. A lot of internal messages. That came in while I was here. I just want to make sure there's nothing too urgent. Okay, so I'm going to open up quickly here. I can see some questions floating around on the screen, but I'm going to open it up so I can see all the old questions as well, so I don't miss any, or at least try not to miss any. So bear with me for one moment as I bring this up. Hold on, guys. Now I'm playing myself. I'm like literally looking at myself 30 seconds in the past. Hold on. All right, hold on. So I'm gonna take the question that's on the screen right now, and then I'll go back. So I see FMP from YouTube. Are you going to show daily, weekly, monthly burn rates on the dashboard? Yes, on the transparency page, actually on the front end. It would be interesting for coin holders to create a FOMO loop where higher volume. Actually, that transparency page you see on the front end is going to evolve quite dramatically, I guess, once we go live. And right now, it shows token sale results because really, as far as any type of financial results, the only things we have. But it will morph into something something much more interesting, I guess, as we launch the platform. So it'll have burn rates, it'll show daily volumes, it'll show the amount of XCM bought, paid in. It's going to show revenues. It'll show all types of different things about our platform, as transparent as we possibly can be, given GDPR and given some other things that we need to follow. But we'll be as transparent as possibly can be. That's the goal. Then we have Mikkel Larson on Facebook. What is the official launch date for now? If you're talking about official launch date live, so September 24th, we will push the open beta with the 3 trading platforms. And then between September 30th and December 31st, we will push those 3 platforms live to the open beta community, and then subsequently start to launch them live publicly. So it depends on how long that process takes. We're limiting ourselves to December 31st, which would mean January 1st would be the first launch live, right, in 2019. However, I do think we're going to make it before then, but we're limiting ourselves to launch the 3 inside the open beta, inside the open community, sorry, at live with actual trading by the end of December. That's the limit. Also, hey Kevin, how long time no see? How are you? I have been away for a few months without the ability to follow the project that much. How is everything going? What is the status on the business as for now? And when do you expect some big news for the community? Well, I think I covered a lot of those questions while I was just here mumbling for the past hour and a half. But lots is going on. I think, you know, like I said, a lot of people, Mikkel, focus on development or what they can see from the development side or what GUIs they're looking at on a page. And I think that's the wrong thing to focus. Well, it's not the wrong thing to focus on. People should be focusing on that for sure, but there's other things that need to be focused on. You know, the fact that we have fiat credit card deposits, the fact that we it linked through a bank, not a third-party provider that can cut us off so easily, but an actual bank accounts at a retail bank, not a private bank, fiat on-ramps through other third-party providers. The fact that we've been able to talk to regulators and get invited to conferences with regulators, have open discussions with them. The fact that we've been able to, have open discussions with providers that generally don't deal with crypto that are willing to deal with us. All these things require lots of effort, lots of energy, and they're things that no other crypto company up to this point has been able to do, and it has a lot to do with our backgrounds. So. All in all, we've come a long way in a relatively short amount of time. I know in ICO realm or whatever, 8, 9, 10 months. Actually, since the end of the token sale, it's been, I guess, 6 months. Seem like eternity, but in the real world, especially when dealing with a regulated financial marketplace, it's like it's nothing. And I think we've come quite a long way because of that. Let me check on YouTube here. I'm going to scroll back. So we got Bjorn who asked about when Moon and when Lambo. Why I'm not rich yet. I think I've already kind of covered a lot of that stuff. So somebody asking if I was their dad on YouTube. when will you do the porridge? I've waited for 2 weeks. Well, I don't really make porridge. Yeah, I just never really liked it. So if I was your dad, you'd have fresh fruit in the morning, I guess. So no more porridge for you. Then I have Pedro on YouTube saying, answer it. You could have won a prize. I don't know if I won a prize, but if I did, let me know. You said September 24th you will push all platforms. The trade view is just a mock-up already, or you will see it in 3 days. No, you will see it in 3 days, Tim. On September 24th, I think in the update email that was sent out, it's in there, but on September 24th, I forget the exact timestamp. It might be 2 p.m. GMT. I could be wrong there on that one. Don't quote me on that one. But on September 24th, all 3 will be released inside that open beta, not just as a mock-up. Carlo, great AMA. Thanks, Carlo. Appreciate it. All right, guys. Any other questions? Please throw them at me. Give you guys a few minutes. It's been an hour and a half, so I guess not quite yet 2 hours, but we've definitely okay. When you say Q4, do you expect PMFFMP on YouTube? When you say Q4, do you expect December? As I said, so the this open beta September 24th is when it's going to kick off, right? Then we've given ourselves between Q3 and Q4 to launch the 3 platforms we currently have, will currently have in that open beta live. If we can do that in quick succession, because as we launch Simplex Live, there's no major bugs, and we move on to the intermediate, everybody loves it, everything working, nobody has any further comments, then we go on to onto the trade, same thing. Let's say it takes us a month to do that. Now, I'm not saying it will, I'm just putting that out there. Let's say that takes a month. Then at that point, we basically start pushing those things out live to the public. So we're giving ourselves 3 months in order to push them from open beta into live to you guys, and then live to you guys. We test out obviously funding, we test out deposits, withdrawals, we test out real money trading, which is obviously that's a high risk test. So we need to make sure everything's done correctly. Once we know what works for you guys, then we start launching them publicly. So it could be that we do launch publicly before the end of Q4, meaning before the end of December. It's definitely possible. From Bjorn on YouTube, will the debit card launch this year or Q1 next year? Will we be able to design how it looks ourselves? Well, you won't be able to design how it looks yourselves. I know some credit cards offer, you can design your own card, but that's because they've already done, millions of cards, and the printer allows them to get a little flexible. We won't be able to do that initially. We will design probably more than one card design, 1 or 2 card designs. Will they be ready by the end of this Q4? I do believe they will be. We're on schedule to do that. It all depends on negotiations in the next month. So let's say mid-October, I will know if we're going to get it by the end of that deadline, because right now we're in final negotiations with now 5 companies to find out who we want to work with. Luke Morbin, will there be on YouTube? Will there be a paper trading mode on the trading view after beta ends for noobs? Yes. The plan is to have actual paper trading or demo mode on all 3 platforms, so that when people go through the Coin Academy, when they get through the first, let's say 3, 4, 5 lessons, they can try out the Simplex and understand how basic exchange works on a paper trading. And then they can do the same with intermediate, and then the same with the trade, and then they can start trading live. So yes, we will offer it. Luke, further, will there be API support for algo trading? Yes, that's definitely 100%. I don't really believe in REST APIs, so we will have Fix, that's for sure, because most institutional players know Fix. They've used Fix, they use it in other markets, they're going to be able to use it here. That means they don't need to code, crypto, in order to become mainstream, at least as far as trading goes, needs standardized access, and everybody having their own type of API is never going to get us there. So we will offer Fix. We probably will have an API as well, just in case, but Fix will be the main gateway for algo trading. To answer your question, Luke. Bjorn, you talked about expanding revenue streams from YouTube, by the way, and services beyond what initially promised in the roadmap. What kind of services are these that you have in mind? Can you expand on that? Sure. I don't want to expand too much because obviously these are all things that are works in progress. And I don't necessarily want to give out the entire roadmap to everyone else and somebody that may be listening. But the idea is to offer everything that something like a TransferWise and Revolut offers, as well as everything that something like a Coinbase offers, as well as everything that something like a Robinhood offers. So multi-asset trading, remittances, e-wallets, fiat wallets, debit cards, the ability to pay third parties, the ability to pay your bills, the ability to have an IBAN and have your income deposited to that account. Basically, banking services, as well as crypto services, as well as trading services, all under one umbrella. That's essentially the gist. And then merchant services built on top of that platform as well, perhaps some form of peer-to-peer services, basically capturing all the different fintech that revolves around banking and payments with crypto. That's the idea. Not necessarily PayPal for crypto, Tim. PayPal is probably not the best use case here or the best idea to think about. It's, think about what you can do with your bank and think about what you can do on a crypto trading platform, and then think about what you can do on an FX trading platform, a stock trading platform, and combine those all into one. And yes, PayPal to a certain extent, because when you tap on merchant services, etc., yeah, I guess it's PayPal-ish. It's not necessarily for crypto. It's bringing crypto into traditional finance. It's giving everything that a crypto guy would want, but also everything someone who could care less about crypto would want. I don't want to limit my client base to the adoption rate of crypto. I'd rather limit my client base to everybody on the face of the earth. It just makes a lot more sense. So that's really the idea there. Bjorn, when can we expect a decision on whether or not there'll be another flash sale? I, for one, would like a new flash sale. I would say that given the current pricing, if we remain where we are, there almost 100% will be another flash sale. The question is, how do we do that flash sale? Now, I'm going to give you guys an idea that I brought up in a business, not a marketing meeting, but a board meeting. And I'll let you guys discuss this amongst yourselves and see what you think. The idea is this. I think the flash sales were very beneficial for us because they were new. They were something new. They created a bit of buzz. It's not going to create much buzz anymore because I think other people have been doing it as well. So how do we create buzz, and how do we give back a bit, and how do we instill a bit more value into the token? That was the question that I brought to myself. I answered that question like this. I helped create a token structure for this real estate project here, this asset-backed real estate project that allows you to give underlying yield without being considered a security under Estonian law. So the idea would be to basically combine a token with a bond, meaning that you buy the token at 12 cents, let's say. If after a vesting period expires, let's say 1 year, vesting period is the wrong word, a period of time expires, the token has fallen in value and you continue to hold it, then you would be entitled to a certain percent interest payment payable in bonus tokens at the end of that period, and then every year thereafter where the price is still below the price you paid. What that does is it gives an underlying yield, and it gives gives access to a guaranteed rate of return. And I think that could be rather revolutionary. So these things are still in discussion. This is not something that I've decided to do yet, nor do I know if it's completely possible. But I'd love to hear people's feedback on that. PMF FMP, I've heard that you said that you don't expect the exchange on its own to make big profits. How are the other ways that you are going to profit from the company profit XML holders as well? Well, I think I explained some of those already. So, when you look at a business model like Revolut, their main income source are those debit cards. They charge a fixed monthly rate. They lock you in for a year. That means when they bring on a client that gets a debit card at €8 a month, they automatically know that client's worth €96 to them on a yearly basis, right? They have some costs built into that, but most of the things that are built in, like insurance and whatever, nobody uses. So they know that they have a fixed amount of money that they know they're going to make. That's a very good thing in a business like ours, because with other things it's speculation, meaning we don't know how much most people are going to trade. We don't know if you deposit $1 million, we may make less money on you than someone that deposits 10,000. It all depends on your volumes, right? So building in the debit card model with that type of Revolut model is one way. Making money on indiscriminate behind the scenes kind of fees that are still lower than any other. I'll give you an example. Credit card deposits, right? The average credit card deposit fee is about 2.99%. I've seen them much higher, but that may not be the average, but I see many platforms at about 3%. We pay significantly less than that, which means we can still charge that amount and be competitive, or maybe even a little less, and make a significant amount of money on credit card deposits. We have remittances. We have the debit cards themselves, but not only the monthly fees, but also fees on POS, fees when people use the card, etc., cash withdrawals. We then have the TAM and the ETCF that can have performance-based fees and management fees that are standard in the finance industry. We also have fee structures that can be built onto those different merchant fees, etc. when we build out merchant payments. There's a lot of different fee structures actually that can be built out. The point is that we want to make it simple on the client side. We don't want to make the fees onerous. We want to make sure that we're still ultra competitive, but where we can charge money and still be competitive because we simply have better rates, because we negotiated better rates or for what have you, that is where we will also be able to make some revenue. Tim, where is the advantage for a flash sale ICO buyers? People who bought do speculate much less on company success. There should be a revenue for old ones. Where is the advantage for flash sale ICO buyers? Well, you guys got a lot of advantages. One, because you're entitled to those discounts. You're entitled to mainly the discount, to be honest. That's a big one. You also bought at lower prices for the most part. You also bought in when Ethereum and Bitcoin were significantly higher than they are right now. So there are definitely advantages there. This bond issuance type of token would only be offered to current token holders, so it wouldn't be offered to the general public. So you would be able to take advantage of it to a certain extent. Again, the advantage is obviously because you bought in at a lower price for the most part. That's the advantage. And you have a 25% discount, which wouldn't necessarily be offered to any new purchases. We'll buy on the next sale, maybe if there is one. Okay, Tim. Okay. Anything else, guys? Any other questions? Can you explain your idea again, please? Tim, what idea is that exactly? To generate hype for the next token sale. So that's not really about generating hype. It's really just to, well, I guess it's partially about generating hype. The idea is this. Tokens purchased, same thing we've always talked about, 12 cents day one, 13 cents day two, 14 cents day three, 15 cents listed on the exchange day four. The difference is that the perk here added in is that we create a bond issuance around these tokens, meaning that if 12 months after you bought the token, it's worth less than what you paid and you still hold those tokens, you are entitled to a fixed interest rate. So it's basically like you're giving the company, it's not really a loan because it won't be paid back, but it's bondish, let's say. So you're entitled to some fixed rate of interest on the initial contribution amount. So this way, even if in a year it's lower, you still have underlying revenue, and you have underlying interest, even if the token is less. And if at year 2, after another 12 months, it's still lower, you get paid that interest again, and you get paid that interest every year that the token price is below the price you paid. These advantages would not be applied to old tokens, no. I think the initial purchasers had quite many advantages. One being that when they bought in, if they had already owned Ethereum or Bitcoin, it was obviously worth much more money, which means they were able to buy many more tokens. If they bought Ethereum to buy in, obviously they mitigate that benefit, but they do get a 25% discount on trading fees, which this new flash sale would not entail. Yeah, there's I don't think we would apply these. It'd be difficult, if not impossible, to apply these to old buyers. No, you're missing, Tim, you're missing the point. If the token went to 1 cent, let's say you bought 1,000 euros worth of tokens, and a year from now it went to 1 cent, we would have to pay you, let's say the rate was 5%, we would pay you 5% of 1,000, that'd be 50 euros in interest. So we are going to convert immediately the funds you send us into fiat currency. So there is absolutely no risk on our side in correlation to the value of the token. It's just a fixed interest rate. The risk is that if it stayed like that for years, we would have to pay 5, 10, 15, 20, 30%, whatever, of the amount that was paid to us initially. But it doesn't carry a risk, as we would have to pay out substantially higher than what was invested with us. Or contributed, sorry. It's been a long day. Okay, guys, I don't see anything coming through on Facebook. I'm just going to check Facebook to make sure that I'm not, missing something here. No, I guess not. Okay. So, anything else, guys? Any other questions? We're about 6:48 right now, so we're very close to those 2 hours. We almost made it. Oh. PMF FMP again. If you, oh geez, give me a second here again. Oh, so 4 more days until release. Tim, yep, 4 more days. I think you asked down here, are you nervous? Nope, not at all. I've already seen everything myself, so not nervous at all. If you sold PMF again, if you sold tokens at ICO at 5 cents, won't the price probably drop by a lot as soon as the token is tradable? I know there is a vesting period, but the tokens that are sellable would still lower the price. Well, the ones that are sellable at launch will be 7 cents and above. One of the reasons for doing these flash sales at the end of the day is to drum up some additional hype, because if we're offering underlying yield and we're doing these things, even if we're just doing it to a closed amount of people, people are going to see this on the outside and maybe want to buy in. We're going to have platforms that have been released. We're going to have things that are public. We're going to be generating revenue. It's going to be a lot different from the first ICO. All that's going to help generate hype to make people want to buy the token. We're going to give people that buy the token discounts. We're going to be paying makers and discounting all their market orders. I mean, there's a lot of reasons why people might want to buy that token right out of the gate. So you're right. It does put pressure. It puts immediate pressure, but long-term, that pressure, the amount of tokens that were available at 3, 5, 7, 9 cents is quite small in comparative to the amount that was available at other price levels. So, is there a time when the release is 2 p.m.? I think it's in the email we sent out. I don't have the email in front of me right now, unfortunately, but I think it is 2 p.m. GMT. I could be wrong though, but I will have a glance at it and post it on Telegram a little later today. Tim, how long is the vesting period now for guys who bought at 1 to 7? There is no 1 cent. It was 3 and 5, and the vesting period up till right now is still the same. It hasn't changed. It's 6 months. So 90 days, a certain amount is released. 90 days, another amount is released. That hasn't changed yet. That's still in debate whether we should alter that. 7 cents and above, no vesting. Brett's 3233. Do you already have an estimate on what the interest rate would be? 3 to 5%, somewhere in there, more than likely. Tim Muller, Binance do have 200 million coins. Just count 100 million on CMC. How much will you count? Well, CoinMarketCap really, in reality, should show the available market cap, right? It's really what's available, what's liquid in the market. So that would be our reserve plus the tokens that are available or are purchased or sitting on clients' wallets. Tokens that were paid to advisors, I guess, probably could be there as well. They will be sold back in the market at some point. Tokens that are sold or vested for employees, I don't think should be counted until the vesting's over. So generally speaking, it'll be the full sum. But we may limit it at first based on vesting and based on some other factors. But generally speaking, I think it'll be all of them. Matt, thanks for another AMA. I think the flashlight is a good idea if doable. Thank you, Matt. Tim Miller, okay, thanks. Have a great week. See you in 4 days if there's no release. Yeah. Well, if there's no release, I guess I won't be sleeping, so I'm sure I'll see everybody in Telegram and be taking quite a brunt. But I've seen everything. It's pretty much ready to go now. We're now just going through final tests and stuff, so I'm pretty sure the 24th is going to get hit. You learn from your mistakes, guys. So I think we're eventually at some point we're going to be releasing on dates when we say we're going to release. I think this might be one of them. PMF, if you contributed to the ICO, sold the tokens and bought back in again, would you still be able to get interest on your tokens? Well, you wouldn't be able to sell beforehand because this would happen on a flash sale before the launch. So I guess the answer to that would be no. One more question from Tim. Is there any revenue for the best paper trader? Yeah, we're going to run some contests. So there will be contests for paper trading that will be announced shortly after the 24th, probably within the next week or 10 days after the 24th. We'll run a week's worth of trading, paper trading contests. So be on the lookout for that. And in the future, I think we'll constantly do that. It's a great way to incentivize people to try the platform. So it makes sense to continue to do things like that in the future. Okay, guys, with 7 minutes before the 2-hour mark, I'm going to call it an afternoon. I have another meeting to run to at 7:15, so I got to get ready. I appreciate you guys coming here. I appreciate all the good questions. Appreciate all the feedback, especially on YouTube. Lots of feedback today. Thanks a lot to PFM, whatever your acronym was. Sorry about that. And Tim Mueller as well, and everybody else who asked questions. And see you guys next week. Have a great weekend. Spend time with family and friends. Have a good time. This week maybe you can look at Ethereum a bit, and I think we might actually see a bit more bullishness over the weekend after synthetic markets close down today, New York time. CoinMetro fan, yeah. Good question. I like good questions. Good question doesn't mean it has to be positive question. Good questions can be whatever, negative or a bit. Or a bit against, whatever, a bit trollish, I guess. That's fine. It's still a good question. So yeah, I like CoinMetro fan. Keep it coming. Anyway, guys, like I said, have a good weekend. See you guys next week. I will try to jump into Telegram here in a bit. And thanks for stopping by. I think it was a good AMA. We just about made the 2 hours, so that's cool. Anyway, guys, see you next week. Bye.